Well, it's time for the market focus here on BizNews. I'm Bronwyn Nielsen. David Shapiro, Sasfin Securities, joining us right. It's Monday. News flow hit us last week. Where do we start with today's discussion?
It's difficult to put it all together and to decide where to go. Look, the one thing that is improving is markets are a little steadier, because we had a bit of a scare last week. We weren't quite sure where we were going, particularly with what was happening in Afghanistan, the Fed minutes about pulling back, tapering. So all of these did shake the market. In fact, there was a lot more bad news than good news. In fact, I'm still struggling to find the good news, but markets held up. And it's a good sign to see this morning, even Asian markets are improving quite a lot. So I still think we're going to, I don't want to say limp through to the end of the year, but we're probably just going to ratchet up very slowly into the new year. And the other good thing, Bronwyn, is that I think commodity markets have stabilized, because you know what we saw on our market as well, a big shakeup in commodities, which was also a bit of a scary move. So I'm hoping that there's some base being formed and the buyers are returning and things are getting steadier.
I want to focus on the Rand because there was a little panic that set in. And of course, that commodity underpin has always been what's held the Rand relatively strong through extensive ways. What is your view? I mean, there are commentators saying, we could see the dollar Rand retracing from a weakness perspective all the way 18. Experts at Sasfin Securities, what are they saying?
Oh, I don't think there are any experts in currencies. I think you hold yourself out to be an expert, you're setting yourself up for failure. So I think that I'm watching it carefully. I'm more of a commodity bull than a bear. But I say a commodity bull, I think that we will find a level and things will pick up, because I'm basing this on the themes that are dominating the global economy, which is around climate change, or to put it more into perspective, against renewal. I think we got to renew not only the digital economy, not only the environment, but also the physical economy. So I still think that when these are market moves, after some very strong upward moves, you get the corrections. But I think overall, and I'm taking my lead from mining bosses, I think you'll find commodity prices steady, and that will still dictate the level of the Rand. So I think we had the shock. We're 1535. I would probably guess it will level around the 15 area. I'm not a pessimist to the 18, because with that will come some very serious movements in global markets. So
we have Sibanye-Stillwater. You're going to be looking at one with interest. Obviously, that PGM underpin is very important, given what you've just said about renewables. Wayne McCurry last week, when I was chatting to him, saying that there's the super cycle when it comes to commodities, wherever they are applicable in the renewable energy space.
Yeah, I think we've been disappointed in platinum, and you've seen even palladium's been coming down and retracing a lot of the issue. We don't, no one really knows what the dynamic forces are, because when you deal in commodities, there's always the middleman, and that goes through from biblical times. There was always a middleman, whether it was in wheat or whether it was in agriculture. In agriculture, there was someone who would buy the crop and then sell it and give the farmer what he wanted, so he could plant next year's crop. So I don't think this is anything new in commodity markets, and I think we're going through a little bit of an adjustment in the middle ground at the moment. I've been disappointed in the platinum and palladium price, or certainly maybe in the platinum prices. I thought that there'd be much more of a reaction against this view that platinum is a clean metal and will be used in renewables. And we're not, the one thing that we're getting a little too carried away with is the coal market. We think that we're going to dispense with it overnight. Forget it. It's going to be with us for a long time. And I think even carbon, even motor cars, we're not going purely electric. I must tell you something. I'm in Boston now, and I had my first drive in a Tesla, and you can hear the road.
From here.
It was very minimalist inside, very minimalist, but a very smooth drive and very fast and powerful and that, but very popular here. I've seen many Teslas. I think the one issue, and I know we're digressing, but it's still an interesting story. The one issue is the stations. What do you call it? The recharging stations.
The charging platforms.
It's still an issue, where you set them up, where you can find them, and so on. I think it's going to take time before that infrastructure is really national. In other words, almost global in that. So, but I've seen a lot of electric cars, and I've seen certainly a number of Teslas here.
David, last week we saw the banks reporting. Obviously, you've done extensive commentary on that. You aren't necessarily a big fan of the banks. And of course, there's also the launch of Bank Zero to the public. So competition continues in the banking sector. The only bank still to report and that will be coming out around about mid-September. Is there anything that, when you look at the FirstRand story, that differs to the likes of ABSA and Standard Bank and Nedbank?
I don't know it that well. I don't analyze it to a point where I can really differentiate to an extent. I must say that most of my investment focus is offshore, but of course I keep a very watchful eye on what's happening in South Africa. And you've heard me before, I like to look at the macro picture. That doesn't mean I don't go to the micro level and look at businesses individually, but I'm still concerned about the macro level. And I haven't seen anything in ABSA or in Standard Bank that makes me get excited. That shows me, and this is my story, that shows me that businesses are going out there with an expansion, with expansion in mind, and going out and borrowing, say we need money to build new factories, to expand our operations. I haven't seen that. Look, a lot of the businesses might already have money. Certainly the mines have. But when that's why banks, that's the purpose of the bank, is really to fund expansion, not to really expand, to fund consumption, because that's dangerous lending. So I'm still not convinced that we've seen any element of that yet, and when that starts to happening, then I'm going to get bullish. And the other story where I do like financials is on the payment side of it. And I think we've discussed this before, where younger people are changing their attitudes towards banks. So I don't know Bank Zero well enough, but what I do know is that those old legacy relationships are very fragile. In other words, when you go into the new generations and millennials, they can change their mind at the switch of they can turn off their phones and say, I don't like this bank, I'm going somewhere else. And that worries me with the older generation banks, and that there's younger people have got a completely different attitude towards investment and towards banking. So you've got to keep an open mind around that.
Aspect that I'd like to focus on, David, is the Johannesburg Stock Exchange has been running a series of SA stock picks. This actually started with your challenge to the CEO of the Johannesburg Stock Exchange, Dr. Leila, where you said, come on, let's do something that shows value from a JSE, Johannesburg Stock Exchange perspective. You did a presentation and you chose pick and shovel stocks. You had 6 minutes, you had to talk about 3 stocks in the 6 minutes, and that's where you went to the pick and shovel stocks. Perhaps worth just elaborating here, and also on the broader exercise that SA stock pick exercise has really demonstrated value in the JSE. 6 experts, 3 stocks in the first series, 6 experts, 3 stocks in the second series. So effectively 36 stocks that have been discussed as a result of your challenge to Dr. Leila Fourie.
Well, the backdrop to it is, remember, I'm celebrating my 50th year on the stock exchange. I haven't got to the anniversary, but this is my 50th year. And I've always been a stock man, and I've always liked to look at individual companies. And I felt that if you're a young person, or even if you're it doesn't mean age is actually not, if you want to handle your own portfolio, there's far more attraction in actually finding individual stocks rather than hugging the index and playing it safe by going for the index. I'm not saying that you wouldn't have made money, but I think that what this exercise has proved is that outside of the index, outside of the Satrix 40 or outside of the top 40 or so and so, there's a lot of money that has been made. And I chose picks and shovels because I still believe that's the one area of the South African economy where a lot of activity is taking place, and mining is expanding, and businesses around that, I believed, are going to do very well. So I chose Barlow's, I chose Invicta. Sorry, Hudayco. I like Invicta as well. And AECI, who make the explosives and that. So, but I think I've been fascinated by some of the other choices that have come out. But what they've demonstrated, Bronwyn, and I think it's a message that I like to push across, is that, you know, if you're handling your own portfolio, there's plenty of opportunities. It's very difficult for institutions because you need depth. You know, if you're running multi-billion rand portfolios, sometimes in those smaller businesses, it's very hard to find value. But I mean, time and time again, it's proved that there's just do your research. You don't have to be a CFA. You don't even have to be an accountant or anything. You can find good businesses. So, and I still push that. I still push that view.
David, that you can weigh in, specifically given your vista in Boston and the fact that you've got family all over the world, is the stop-start economy that we're seeing globally.
Yeah.
When economy starts picking up and then everyone comes into the lockdown, is this our status quo for the full way? Because you have that global perspective, given, you know, the different family members that you have all over the world.
And it's quite incredible to see what is happening in Australia, who are way ahead of everybody and had opened up, are now in deep lockdown and struggling to get on top of it, simply because they delayed their vaccination program. And it's starting to tell on them. They're starting to get irritable and frustrated because of lockdown. So there you are. We had Australia up, now they've gone backwards. And what I found, I'm in Boston at the moment. I found Boston to be very free and open. But there's an interesting incident, and is that on the weekend we went to a restaurant not in the center of Boston, but on the outlying outskirts, a very nice restaurant. They never had staff because the varsity students have all, you know, now going back to varsity, and there were no waiters, and they apologized. The barman actually acted as our waiter. So what's happening now is that, you know, when you hear about the shortage of staff, it's very real. People cannot find, it might be at a low level, but it's real. You can't find people to do those kind of jobs. So they're hoping that the new batch intake of students will help them find waiters. So, I mean, and all over you see, you know, we are hiring, we're wanting. So from Boston's point of view, things are okay. New York, you can still see the scars of the pandemic. The tourists are not there, and they make up a very big part of the season. So, and also now we're going into winter, you're starting to get the worry of the Delta variant. So people are now starting to get concerned of further outbreaks. So it's all leading to the stop-start. And Bronwyn, what I'm trying to get at is that I think it's far too early to start talking about withdrawing stimulus or just you know, going back to where we are. We're not where we are, you know, in many respects. So that applies to South Africa, Australia, and I think even to the US. I still think there's a lot of room that we have to cover, a lot of ground, that we have to cover.
What about the theme as a play in the stock market? Dave, something that we've discussed repeatedly. Is it too late to get on the bandwagon and say, actually, you know, this is where we should be putting our money?
Absolutely. I still think it's the biggest theme of all. I think it's much bigger than renewables and any of those themes, for the very reason is that we're now starting to talk about the third vaccine, the boosters, and those boosters are going to be every year. So all your pharmaceutical companies or those involved are going to be, we'd written them off that it's over now. No, forget about it. It's going to be ongoing. And I think the other big story is public health. We're not going to go through this again. And I think everybody's looking at it. I might have mentioned it to you as well. There's neighbors of ours here, just in Boston here, where two of the neighbors are both medical people. And what they're nervous of is that they said that if there's another wave, they will not find enough nursing staff for the ICU, because the nursing staff do not want to go through that trauma again. They're absolutely traumatized about what happened. So there's going to be skill shortages. Now, that plays into your theme. We've got to relook at public health. You've got to relook at the training of nurses. You've got to relook at how do you handle all the traumas that they went through? How do you handle the psychological side? So besides the medical side, there's just so many elements of it, the training side of the right kind of staff, plenty of that staff, encouraging people to come into the medical profession and so on. So I think it's and then diagnostics, quick testing, all of those issues. So I think it's a big theme that's going to not overshadow, but it's going to be as big as as any of the other themes that we've been talking about.
How would you look at a company in the local space? Well, obviously also with global reach, Aspen Pharmacare, given the production of the J&J vaccine at their Port Elizabeth facility. Does that change your view on Aspen?
Yes, it does in a sense, because you're pushing more throughput through the factories. So you might not be making big, massive, juicy margins, but the more you put through a factory, the quicker you recover fixed costs. So I don't want to confuse people by that, but anybody in accounting knows that, if you pay your rent, what is the first thing you do is say, I've got my rent. Once you've got your rent, any money that you receive after that is just pure profit. So I think this is paying, put it in very basic terms, this will pay their rent, and everything they make thereafter is going to be kind of pure profit. And that. So don't underestimate what these drugs, whether it's for AIDS, ARVs, whatever, ARVs, yeah. And we've forgotten about AIDS already, but I mean, and also for pandemic, I think the more you push through factories, the more they're going to make, and it gives them a margin to make up on the their thrombosis and anesthetic drugs.
The week ahead, anything that we need to really look out for? I'm sure you will be chatting again to Alec on the business platform, but anything that you have at the front and center from a markets perspective as we go into?
Oh, there's still quite a lot of local results that are coming out. I've been trying to get my way through the retail stocks, and I can't make up my mind on them. Yeah. It's very confusing because we've come from such a low base. I was looking at ShopRite's result this morning. They're very steady numbers, but there again, one's got to work out, okay, where do we go next year? Are we going to have a leap up, or is the South African economy still weak? Not to give them the growth, because the numbers are a little distorted because of the comparatives that we had. And I keep saying this, and I'll say it every week, I think that South Africa companies are very well managed, whether it's our banks, whether it's our retailers. We've got very strong management. The problem is the underlying economy, the base on which they're operating, that makes it more difficult. So we are coming to the end of the month. This is the last week in August. And I think from then on, maybe next week is going to be more of a, we're going to get the manufacturing numbers coming out, the mining numbers, and then we get the job numbers in the United States and so on. But for the meantime, I think I can live with a steady week. I think we had enough to digest last week to give us a scare. So I'm hoping this is a better week ahead, but it's going to be results driven.
Before you leave us, as you say, results driven, you are giving me the sense that the jury's out on the retailers, given perhaps a stop-start economy. Would that be a fair
Yeah,
assessment?
that's my view. From a trading point of view, they're doing okay. But we like to look 2, 3, 4, 5 years ahead and say, what is the economy going to look like? And I think a lot of that's going to depend on whether we get out, whether we're able to stabilize the commodity market, whether they stabilize and start picking up. I think they will. I'm not that pessimistic on that side of the on that side of the economy, and I'm talking globally. I think that once we've got Kabul out the way and all these issues, I think we'll start picking up on where we left off. I still remain positive that a lot more spending is going to take place on renewing the global economy in many areas. So I'm an eternal bull, but I'm not optimistic just for the sake of being optimistic. I think there is valid reason for that.
Thank you so much for joining us here on BizNews. David Shapiro from Sasfin Securities.